It's Sunday, it's time to reflect upon the week, so let's get to it. So right now where I'm at is I have two Finnet accounts, one with TopStep, 50k TopStep Finnet account that I'm in a little bit of profit on. I need like 2 more winning days of 200 plus to request my first payout. And then at the other company I'm trading with, it's called Blue Sky, and I also have a 200k static account with them. That's a little bit of loss, but I'm sure I can recover it. And next to that I also have 2 TopStep X challenges. So let me show you guys. So this is my TopStep account. Let me log in. I'm about $400 into profit, as you can see right here. And on my TopStep X also I am halfway there, and I'm copying these accounts. So I have 2 50k accounts, and whenever I take profit on one account, of course the other one is also getting profits from that. So that's nice. Copy trading through this platform is really easy. Although I like trading better on TradingView itself, just my thoughts, because I really like trading on TradingView. But yeah, that's basically where I'm at. So now I just finished my weekly reflection, so I just do it by myself, just take it easy, see what trades I took, and just see my thoughts and my notes from that trading day. And then I will just explain it to you guys on YouTube, so I can soak it in my brain and just learn again and again, just read my mistakes over and over again. So I'm just gonna go and share my trades of this week. I took 2. And 2 are winners actually, so I had a really good trading week, and then I decided to not really trade again after Wednesday. That was my last trade, because you know, this protect your capital, I think it's really important if you're already up nice on the week to just be very picky with which trades you're gonna take next. And so I didn't really see something that was like crazy obvious, so I decided to just stick with the 2 trades and just call it a week there. So yeah, let me show you the 2 trades I took. So I did not trade on Monday because it was a no news Monday. Do not trade that, just want to prevent those days. But on Tuesday I took my first trade. My initial bias was bullish for a little bit going into the first part of the week, because I was bearish on the higher time frame, like overall, like coming weeks I think we're gonna drop on S&P, because the DXY is looking really clean on the daily time frame if you look at this, to take out these equal highs. So that was my bias on DXY, and I take that with me of course on NQ and ES. So if we go and compare NQ and ES on the hour 4 time frame, and we check basically the monthly cycle, so we check the weeks of the highs and lows, we can see that previous week, the week from 16th of June to 23rd of June, the low on Nasdaq from that week, so from the previous week, got taken out, but the low of previous week on ES did not. So as you can see, this is a big SMT like this, a monthly SMT, because it's between 2 different weeks, the previous and the current one. That was also my bias going into the week, just to, I think, retrace a little bit towards this fair value gap and not just go down immediately, right? So going on the hour 1 time frame, we also had a weekly SMT. So if you take a look on this is a weekly SMT. It's between Monday and Tuesday. Basically on on NQ we took out that low of Monday on Tuesday, but on ES, take a look, it did not happen. So that was a weekly SMT. So now we have a monthly and a weekly. So I was really interested in taking longs. So let us scale down to the minute 15 time frame and see what else we got right here. So I marked out the monthly SMT, I marked out the weekly SMT, and now this right here is a precision candle. Now this is what I explained in my last videos. This is basically also a candle that is differently closed on another correlated asset. So what do I mean with this? This is a down close candle on NQ, and on ES, if you take a look, where is this? Right here, we have an up close candle. So just because this happens right at this low, when we form weekly SMT, when we sweep this low, this becomes really interesting, right? So now we have 2 cracks, 3 cracks, 3 like we have two correlated assets who are showing signs of differentiation, right? Get what I mean? So we have ES sweeping that low on the monthly, and then ES sweeping that low on the weekly not, and then we have this candle closing differently. So those are all different cracks in correlation that we can use to frame reversal trades from, right? So this was when I turned really bullish. And then right at market open, right, you want to trade when time and price align. So let me go and scale down to the 1 minute time frame and see what else we got right here. So we had this bullish bias, right? But then right at market open, this was market open. So we already displaced from this precision candle, nice. So we have an initial displacement, but now I'm still bullish, right? Until we have other bearish cracks in correlation. So right at 9:40, 10 a.m., which is a really good time to trade, it's a kill zone. We have another bullish SMT, and this one is a micro, so the lowest cycle one. So as you can see on ES and on NQ, on Tuesday we basically formed a micro SMT as well right here on the New York Stock Exchange Open. So I was not there unfortunately, but I maybe would have taken the trade right here. And then actually I don't think I would have taken a trade here. No, never mind. But it's just because there's no clear draw liquidity. Like if you just are a trader who just targets like 2R, like fine, you can trade this. You can just, after this micro SMT and a little displacement, I think you can just long this right here. And then, yeah, I mean, you'll be out at like 2.5 or 3R, or you can hold this the whole day because it would have been an amazing trade. But yeah, for me, I need to target like clean internal liquidity. Because then I know where I need to get out. Like I have a clear take profit target, and here it's like not really nice because I can't really align the internal draw with the external draw, right? What do I mean with this? I need like a clean liquidity buildup right here, right? And here we already took out this high, so I was not really interested in taking longs here because I didn't really know what to target. But then I basically got FOMO because I missed this entry, and I entered right here. Just because I was really bullish, not really a clean entry pattern. I just entered after we retraced a bit, and then displacement was really nice in profit. But yeah, unfortunately, I don't know how much R was it? Already like 1.9 R, which is good. Should have taken profits, but I did not, and I basically got stopped out. So that's a big lesson for me this week. Take fucking profits. It's so important. Like the market will not go forever. The market will not go down forever. So it's really important. If you have a really nice like gain already, just take your profits, right? It's really important. And then basically I was the liquidity for this trade because this was not a good stop loss I had right here. I just had a random stop loss at the, I don't know, maybe at like a 5 minute fair value gap low. Let me double check right here. Yeah, I basically put it like at the low of this fair value gap, but it's really not good because this internal low can still get taken out as internal liquidity to then continue to draw. And so what would have been better right here, but not a good risk to reward, is placing it right here because here is where we like most likely not going back towards, because we already took out this low, and this was already internal liquidity. This was already a turtle soup, right? So yeah, we have a new leg formed right here. So stop should be right here. But nonetheless, I recognized my mistake and I hopped in right here after this internal sweep, and then I catch this nice trade right here. So again, the reason for this trade, I had a really bullish bias, all these bullish cracks right at market open. We tapped below the true day open, below the true session open where the micro SMT was displaced. I FOMO'd in, not a good trade. I should wait for a clean entry setup, which is right here after this turtle soup displacement, and I can target the next internal draw. And here is a clean reason why I would have not taken this trade, but I would have taken this trade. I took this trade just because we have a clear internal draw. This is like an internal market maker buy model that we can even like align with the higher time frame draw, right? If we would have just literally align it with the higher time frame draw like this high, then like it would have taken out as well. So this is a clean example: internal draw, external draw taken out. So yeah, that was a really nice trade. Should have taken profits with the first trade, but the next trade was really nice. I recognized my mistake. I was in liquidity, and yeah, that was that trade. So let's go to Wednesday. Let me take a look. Okay, so on Wednesday, what do we have right here? Let me check my journal. My mood should not get affected by a winning or losing day, and I feel very happy, which is okay, but I can't let it affect my trading decision. So yeah, mostly I write this down because I took another win on Wednesday, but I was feeling like so euphoric. Like I was feeling like I was the best trader on earth, but that should never be how you should feel, because if you're gonna fuck up, then your emotions will be like down bad, right? So yeah, took a nice trade, but I recognized that I was a little bit too euphoric with that winning trade, so I should not be like that. So now on Wednesday, I had a bearish bias because of a few reasons with correlated assets. So you can also use the interest rate asset class to frame trades off, because this asset class, in ideal conditions, it should follow the indices, the index futures, and also the forex market, and of course it will run also inversely correlated with the dollar index. But the reason why I was bearish going into Tuesday is because if you look on the 4-hour time frame, we had a bearish monthly SMT, and I just saw it on Wednesday. So we had this high on the previous week on the T-bond futures and on the ultra 10-year bond. So this is what you should use, right? Just copy these things. This is like what they also uses. Full credits to him. What you do with this is you check the previous quarter on the monthly cycle right here, and you see if it got taken out on the current cycle, and you see only ultra 10-year treasury note futures, it took out that previous week high. On the 5-year T-note, it did not, right? So maybe to make it clear, this is the high of previous week, this is the high of previous week, and this is the high of previous week. So you see that on the 5-year T-note, it did not get taken out. So that was my monthly bearish intermarket sequential SMT between two quarters, between another asset class, because we're not looking at the index futures, we're looking at a different triad, what we call, so three pairs that we check if there is an SMT between, and we take that with us on the Nasdaq and on all other asset classes actually. So together with that, we also had a weekly bearish SMT for the forex market. So the weekly SSMTs, you look for that on the 1-hour time frame. You can see that between Monday and Tuesday, we formed bearish sequential SMT. So the high on Monday on Euro USD was right here. The high on Monday on GBP USD was right here. The low, it's inverse correlated of course on the DXY of Monday, is right here. So take a look at this. GU took out its high on Tuesday from Monday, and it also closed a candle above, so that's even more confluence. So that is another cracking correlation that we can use to also be bearish on index futures, right? So now we have done our intermarket analysis, and we can take all this with the Nasdaq. You can see that this high right here that formed on Wednesday in London session on the 4-hour candle, it is an up close candle on NQ. And take a look, but this is a down close candle on ES. So a lot of bearish cracks in correlation that I used to take shorts, take a profitable short. And now let me show you which trade I took. Let me show you right here. So this is like the 1 minute time frame, right? But this is the high where the hour for precision swing point, like the candle that's differently close on one asset, like up close on NQ and down close on ES. This is where it formed. Now going into the day, like we just like dropped like during the whole rest of the London session. Then we are in New York session. In New York session, we retraced back to the premium of this entire range. So now we are at a place where we expect to already drop. Okay, we are tapping above the true day open, above the true session open. Now we are only trading around the best time. So this is the 10 a.m. This is the New York Stock Exchange open. I'm looking for a great short setup, right? And I'm potentially targeting these lows. That was my target. So looking at this, nothing really seemed interesting until this point. We are in premium, above the true session open, above the true day open. We sweep this high. We displace down, we retrace back to premium. We have a micro SMT. So if you take a look, this right here is the micro SMT between ES and NQ. You can see that this is the high on ES, this is the high on NQ, and these form with SMT, right? So now we have weekly bearish Forex SMT, a monthly interest rate trade bearish SMT. We retrace back to premium. We have an hour 4 bearish precision swing point. We are at the time where we want to trade. It's a kill zone, above true session open, above true day open. We sweep a high. This is a standard ICT 2022 model. Like, we sweep liquidity, we displace, but of course I'm not trading these type of things, but this is actually a day where it played out. We retrace back to a premium fair value gap, micro SMT, and I already took a short right here because I was confident with this sweep and with this displacement that we're going for the lows. And so this was a really nice trade. I took it out right here just because ES at the time, if you take a look, it already took out the low. So when that happens, the market maker sell model is complete. I don't need to see NQ take out the low as well. It's not necessary because ES already did it. So I should have been out right here. I did it. So yeah, I shared the proof on my Instagram if you don't believe me, but this is a trade I took and it was really, really nice. And that pretty much summed up my week. So yeah, my biggest lessons is that I should take profit when I'm in a good risk to reward already and I don't want to lose it. I also should stick with the same risk every trade for now, because I think it's very important to manage your emotions. If you have one loss with like a big risk you took and one with like a small risk, like it doesn't really add up in the end. So I think I should focus on keeping the same risk right now, and later on I will move towards a model where when I have more conviction on a trade, I will put more risk on. But I think for now I need to focus on taking every trade with the same amount of risk, because I should focus on only taking the best setups. And lastly, let me think what I also learned this week. Oh yeah, I need to have a clear reason to get out of a trade. Otherwise you should not be worried. Because let's say the trade on Tuesday, I think I was a little bit scared when I was in a long, and when it actually was a clean long, just because we had like some minute one candle displacement down. But unless there is a clean reason why I should take a trade off, like an opposing bearish SMT or a clean sweep or whatever I trade, right? Whenever I see clear reason to get out, I should get out. But when I am just worried about my trade getting stopped out without a clear reason as to why, because every trade you take has to have a why, a reason. What are the confluences? Why do you, not why do you think, but why? Like, you have SMT, you have R4 value gap, you have above true session open. These are reasons and not like your intuition. You should not trade based on intuition, right? I talk about this a lot, and I think that's also a big lesson for me this week. So yeah, I kind of switched up my content format. This is just the first video I try with like a little bit of like a vlog style, just like some clean shots. Let me know if you like it. I will improve on this. I will maybe hire an editor, but I really like this kind of format. So let me know, give me a like if you like it too. and I will just keep documenting my journey and learn, and hope you guys have an amazing trading week as well, and let's crush it. Tomorrow, Monday, it is going to be the week of 1st June, so we're starting the summer. It's time to lock in, no excuses. I'm super excited. Let's keep on this journey. And as TradingView says, let me see my Discord. TradingView has some crazy quotes every day. If you like close the app or open the app. This is a good quote from TradingView, which I will want to end this video with. It's weak traders focus on results, strong traders focus on the process. So with that being said, I see you guys in the next video. Peace out.